Welcome to the first and probably only old white guys in cars going golfing.
Hopefully not only.
Well, but it's just the recorded version. You know, I'm sitting here with my good friend Matt McClellan from Fairway Mortgage. Hi, Matt.
Hello.
How you doing today?
Good.
Good. So first, let's talk about the Fed and how when it changes the rate, it doesn't totally affect one-for-one the mortgage rate.
Okay, so simply put, the Fed fund rate is the overnight trading rate that banks are charged for lending money to each other, whereas the mortgage rates are long-term bonds, usually 15, 20, 30 years.
Okay, so talking a little bit more about that, when the Fed just cut the rates 50 basis points, interest rates actually went up that day. Why is that?
First off, it surprised the market a little bit. So there was some confusion because the very next day, the market rallied really well. There was the expectation that the Fed was going to drop interest rates for many months. So there was an aspect there that the rates were already, fairly priced in for that movement.
So what you're saying is that the market actually anticipates the Fed and then prices that in before the Fed actually makes their moves?
100%. So the market's anticipating everything. That's the nature of the market, whether it's stocks or bonds. There's always the anticipation of something happening, and then if expectations are let down, that's going to impact things, or if they're exceeded, that's going to impact things.
So where do you see rates going in the short term?
Well, there's a saying in the market that you don't fight the Fed, and right now the Fed is pretty clear that they are wanting to move interest rates down. So short term, I think that interest rates are going to be headed down. As to how much, that seems to be pretty mild from the Fed. They're saying that the next several cuts are going to be mild cuts, not 50 basis points.
Okay. So rates are low sixes right now?
Correct.
Okay.
Yeah, on average.
And a year from now, you see rates, low fives, 5.5, right where they still are?
So my anticipation is that they stay the course, continue to drop interest rates, assets will continue to gain value, hard assets will continue to gain value, including housing, and we see rates reach their target mark, which the Fed has already announced. They want their 30 fixed mortgage rates to be somewhere in the mid to low fours.